Alright guys, I think we are ready to start pulling out some Forex charts. In this video we are going to be covering the basics of chart reading, and we're just going to be, like I said, the very basic concepts, and well, just to make sure that when in future modules and future videos we're going to be studying advanced technical analysis techniques. So I want to make sure that we are all in the same page. So please bear with me in this video. I'm going to show you how to actually read the charts. So when the time comes, like I say, you understand what's going on and you are ready to read the charts by yourself. Okay, first of all, we need to determine the three most common ways of plotting your Forex chart. Actually, it doesn't matter whether it's a Forex chart or a stock trading chart. It doesn't matter what market you are charting. They are all follow the same principles. So, like I said, there are three main ways of most popular ways of expressing your charts. There are more ways, obviously. There are many ways to skin a cat, as they say. But these three are the most popular ones. You got line charts, bar charts, and candlestick charts. I'm gonna review them all for you. I'm gonna show you how to read them, and we'll continue digging a little bit deeper from there. Let's get going. Okay, the first type and the most simple type of chart is the line chart. As you can see, this is a real Forex chart. This is the sterling pound against the American dollar on the daily time frame, meaning that each of these consecutive conjunction points is 1 day worth of price action. Okay, basically a line chart. It just draws a line from one closing point to the next one, and when you link them up together, you get the final chart. Okay, this chart is not really useful as far as active trading goes. This can be okay if you just want to follow how price has been behaving, over the last X period of months, days, years, whatever. But as far as actual trading goes, it's not really that useful because it's just too simplistic. It doesn't offer information enough. Let me try to explain what I mean. I'm gonna zoom in to the far right corner of the chart, right there. Okay, this is the current market price. This is the right end of the chart. This is right now the current price, the current market price, which is 142.91, 93 now for the sterling pound against the American dollar. Now again, I repeat, you get this line chart by linking together the closing points of every different trading session. Now actually, let me draw some vertical lines in this chart. Each of these lines is worth 1 day of price action, okay? One trading session. So, if I just link the closing points of each trading session, I get, well, obviously, the line chart. Now, the line chart represents, as we were saying before, two closing points linked up together. However, that doesn't mean that from the opening time, from yesterday's trading session until yesterday's closing section, it doesn't mean that price actually went up straight in a straight line. Okay, such as here. Okay, that does not represent what actually happened yesterday on yesterday's trading session in the market. Price, if this was yesterday's opening time and this was yesterday's closing time, price could have easily moved up and down throughout the day and finally end up right there. This being the open, this being the close. So all in all, just linking the open and the closing time, you get a straight line, but that doesn't represent what it actually happened on the market. Okay, it may have just had, we may have just had a straight line day, but most likely we didn't. Most likely price wiggled around and ended up right there. That's why we get as a result, well, this type of price action throughout the day. Now, that's way too simplistic for active trading, as I was saying before. It's just not nearly enough information to base our trading decisions. Line charts are good for monitoring. Okay, they are good whenever you are in a trade, or if you just want to, let me zoom out again. If you just want to see how price has been behaving, well, as you can see over the last ever since September 2008 until right now, well, price has been moving down for this particular currency pair. Again, the sterling pound against the American dollar. So by taking a look at the line chart, we can clearly see that price has been going down, but that's about it. That's about as much information as we are going to get from the line chart. If we want to actively get involved in this market, if we want to actively trade the sterling pound against the American dollar, we need more information and we need another type of chart. That's what the line chart, the bars chart and the candlestick chart are for, and that's what we are going to be using for our actual trading. Okay, time to move on to the next type of chart, in this case the bar chart, which along with the candlestick chart is probably the most popular among traders. Now if you really pay attention, and let me actually flip back to the line chart, you will see that the overall market outlook that we get from the line chart, it's rather similar to the one we are gonna be seeing right now on the bar chart. It's pretty similar, like I say, but you just get a little bit more of extra information. If you remember, actually, let me zoom in a little bit more. Just a second. Okay, there we are. This is the right end of the chart. This is actually live market price 145.41 for the sterling pound against the American dollar. Okay. Now, if you remember, the line chart was formed by linking every day's closing point, okay, closing price together in a straight line, and well, therefore we got, by linking all those closing points throughout time, well, you got the line chart. Okay, now in the bar chart, we get 3 more pieces of information. Let's pick, for example, this bar, the last one, which is the live market bar, the last bar that's being printed on the market right now. There are 4 main elements of information that you get from one specific bar, from one individual bar. First one is the open. Okay, this is the open right there, the left wick. This one there at this price, 143.95. That's the price at which this market today, remember this is today's bar, okay, at that price the market opened this morning. Now this is the closing point, the closing price, the right wick of the bar right there, as we've established. 145.44 is the current market price. So we have the open, the close for the day, then we have the highest price that, well, the highest level price has reached today throughout today's trading session, right there around 146 00, 145.95, somewhere around there. And this is the lowest price we've reached today on today's trading session. So again, 4 main elements of information we get: the open, the close, the low for the day, and the high for the day. This is much more information that we got from the line chart. Remember that in the line chart, the only piece of information we got was the closing point of each particular day. Okay, so basically, as you can see, I am pinpointing the closing prices for each particular day, and well, when you link them up, that's the type of chart we would have gotten. if we were drawing the if we were using the line chart. Actually, let me flip back again. Please remember this form. Okay, that's the form. I'm pretty sure you will see on the line chart right now in 1 second. If I select a line chart there you have it. You see that? Okay, this type of W formation. As you can see, it's pretty much presenting the same information that we've just seen on the bar chart, but we cannot see how high or how low price moved within one trading session. That's what the bar chart is for, and that's why it's the type of charting we're going to be using, okay, for our technical analysis trading and our technical analysis studies. Now, candlestick chart is very similar. Again, it's actually pretty much the same thing. The only difference is that the body, we are going to see a body here, a colored body, instead of simply a left wick marking the open and the right wick marking the close. Actually, let me show you now candlestick chart. There it is. Again, we can see exactly the same type of W formation, and it's basically the same type of we get the same 4 pieces of information: the open, the close. Remember, in the bar chart we got the open for the day, the close for the day, the high, and the low. Okay, those are the 4 main pieces of information we've gotten throughout the day from one bar, from one individual bar. Now, the candle in itself is pretty much the same. The only difference is that it's colored. So for some people, myself included, it's more, let's say, visually appealing. It's more intuitive to your eye, just because it's color code. So if you get a green candle, it means that price for this particular day has been moving up. If you get a red candle, it means that price has been moving down. Now, the open for the day in a green candle is the low end of the body. Okay, the close point is the upper end of the body. Then you get the upper wick, meaning or representing right there the highest point for today's price action, and then you get the lower wick, or some people call it the shadow, the lower and upper shadow of a candle. I personally call them wicks, because it sort of resembles a candlestick, doesn't it? So you get the upper wick, the upper tail, the upper shadow. It doesn't matter however you want to call it. This is the body, and this is the upper wick, the lower wick. Alright, so if it's a green candle, price has obviously been moving up. Therefore, the lower end is the lower end of the body is the open for the day. The upper end is the closing point. And now, in a red candle, it's exactly the opposite. You know that price has been moving down. In this one, for example, so the upper end of the candle is the open, and from there, price has been moving down throughout the day, this being the lowest point that it's reached from the day for the day, and from there seems like it retraced a little bit up to finally close at this precise level. Alright, again, moving on to the next candle, this one there, this being the open, since it's a red candle, this being the close, this being the highest point that we reached for the day, this being the lowest price that we reached that day. Next candle, this one here, open, close, high, low. Next one up, this one, since it's a green one, well, this is the open, the lower end of the body. This is the close, this is the low for the day, this is the high, open, close, high, low, open, close, high, low, open, close, high, low, etc., etc. From there, price has been moving up. So these have been the opening prices, and these have been the closing prices. Again, please take a look at this last candle. We have the open, the close, the high, the low, and if we link that up, as you can see, we basically get a bar chart. It's basically exactly the same thing, okay? We get exactly the same information as we get in a candle than we get in a bar, okay? It's exactly the same information. It's just the way you represent it, the way you visually represent that information on the chart. That's actually different. The only difference, again, is that the candle chart is color code. So at least for me, it's more visually appealing, and that's the type of charting I personally use. Okay, I like to see in one quick look whether I get a red candle, I know the price has been going down for that day, or whether I get a green candle, and therefore I know the price has been going up, regardless of, well, whether I don't need to look at the left wick, the right wick representing the open and the close. I don't need to look at any of that. Just by looking at the color, I know whether it's been an up day or a down day. Okay, now it's time to talk about time frames. Already in a previous video, we already outlined the fact that there are five main different type of traders, all the way from scalpers, all the way up to investors, depending on the time frame they base their trading decisions on. If you remember on that previous video, if not, well, you can go back and take a quick look to refresh your mind. Scalpers were traders that look to take multiple trades throughout the day, aiming for small gain per individual trade, perhaps 5, 10 pips, 20 pips at most per individual day. Then we have intraday traders, people who like to search for one individual trade, one specific trade per day. And those people, they target around 30, 40, 50 pips per day, no more than that. Then we have intra-week traders that take 1 or 2 trades per week, shooting for around 150 pips per trade. Then we have intra-month traders, people who are going to take 1, 2, 3 trades per month, shooting for around 200, 300, even 400 pips on every individual trade. And then when we have long-term traders or investors, people who are going to keep a position open for many weeks, months, even over a year, depending on their time scope and their target potential. And we also established that most individual traders actually fall into the category of intraday, intra-week, or intra-month trading, and that's the type of trading we are going to be focused on. Now, as you can imagine, choosing the right time frame for your trading and your charting is crucial for a trader, regardless of what type of trading methodology, what type of time scope you are going to be picking as your personal favorite. Choosing the right time frame is very important, and that's what we are going to be talking about in this video now. Okay, before I told a little lie, and let me try to explain myself. Before I said that each individual candle represents 1 day's worth of price action, this being the open for the day, this being the close for the day, this being the high and the low, right? That's what I said before. I stand by my words, but with a little bit of a of a side statement. That's true as long as you pick the daily chart. You can set the timing of your chart to any period you want to. Okay, you can set your charts to be a daily chart, such as in this case, in that case, each candle indeed represents 24 hours worth of price action. However, you can split that in different sub periods of time, or in the other hand, you can expand that. You can make each candle to be to represent more than 1 day of price action. Okay, you can set it up to a week, to a month, etc., etc. So basically, every individual candle would represent 1 week worth of price action or 1 month, or you can divide that into smaller time segments. So instead of having, in this case, the sterling pound against the American dollar to be set to the daily time frame, you can set your chart. If we go here to periodicity, you can set that up to, for example, the 4 hours time frame, and therefore each individual candle represents 4 hours of time of price action. Again, like I said, most of the charting platforms allow you to segment your time scope in multiple time frames of your choice, all the way from the 1 minute all the way down to the monthly chart. Obviously, if you are a scalper, you'll be plotting your charts on the 1 minute and 5 minutes time frame. If you are an intraday trader, you would probably be picking the 15 minutes, the 30 minutes, and the 1 hour time frame. If you are an intra-week trader, meaning you will be taking 1 trade per week, probably your time frame of choice would be the 4 hours time frame, maybe the daily, somewhere around there between the 4 hours and the daily. If you are an intra-month type of trader, only 1, 2, 3, 4 trades per month, no more than that, then the daily chart should be your time frame of choice. Then investors, long-term traders, etc., will probably be focusing on the weekly and the monthly time frames. Like I said, there is no right or wrong answer to this. It's just a matter of picking your favorite time frame and then setting your charts to the right time frame. Again, scalpers will be using the 1 minute and 5 minute chart. Intraday traders, the 15, 30 and 60 minute chart. Intra-week traders, probably the 4 hours chart. Intra-month traders, probably the daily chart. And then long-term traders, investors, etc., however you want to call it, will be focusing mostly on the weekly and monthly chart. It's just a matter of preferences, what type of trader you want to become, and then simply set your charts to the right time frame. That's all there is to it. Now, one thing that's important to stress is that regardless the time frame you set your charts at, the market quote information, the price information you'll get on your charts is exactly the same. I mean, no matter whether you plot your charts on the daily time frame or on the 1 hour time frame, the market quotes will be exactly the same. It's just the way of representing, of splitting those time segments in your charts what's going to change, but the actual market information is going to be the same. I know this may sound a little bit confusing, but I'm going to try to slice that for you. If we pick the daily time frame, for the last 24 hours worth of price action, we are going to get just 1 candle. Okay, that's what we are going to get. Market open, market close, market high, and market low for the last 24 hours. Fine. Now, if we want to set our charts in the hourly time frame, we are going to get the same market information, but we are going to split that information in 24 segments. Okay, since we are obviously now in the hourly time frame and there are 24 hours within 1 day, we are still going to get the same information, just splitting it up in 24-hour, let's say, mini segments. This is 1 hour worth of price action. This represents another hour worth of price action, and another one, and another one, and another one, and another one, etc., etc., etc. Well, if we count 24 hours back in time, we still get, actually let me zoom out a little bit more to squeeze more hourly candles in our chart. Okay, this is still the high for the day. Right now, this is the close. This is probably the low for the day, or no, actually the low for the day should be this one here. And the open, the 23rd of February, should be somewhere around here. So, this is the open for the day, the low, the high, and the close. Let me actually link that up. We should get on the daily time frame, until here. this type of candle. On the daily time frame, if we add up 24 candles throughout the day, this is gonna be the type of candle we are gonna get on the daily time frame. One massive green candle with this price level here showing the open for the day, this level being the low for the day, this being the high for the day, and this being the close. Okay, please remember this candle, and let's go back into the daily, and that's our candle. That last candle is the result of adding those individual 1 hour candles all the way from the beginning to the beginning of the day until now. Okay, so again, I just want to stress the fact that no matter how you slice your charts, no matter how you split your charts in different time frames, you still get the same market information. It's just gonna be plotted on a different way, okay, on your chart, but the actual market information is exactly the same. If today's low price was right there at, I don't know, let's say 143.80, if you zoom into the 1 hour time frame, also obviously the low for the day is gonna show that precise level. If the high for the day right there is 146.65, no matter what time frame you are setting your charts at, you will still get that same price level for the high for the day. Okay, same market information, just a different way of printing that information on your chart as far as the time frame goes. Okay, now that we know how to read our charts, how to read a line chart, a bar chart, and a candlestick chart, and also now that we know how to set up our charts into different time frames of our choice, it's time to get going, to get moving into actual technical analysis. We are going to be reviewing basic concepts of technical analysis, such as trend lines, such as levels of support and resistance, such as indicators, etc., etc. Obviously, at first, in this introductory module, we are just going to be covering the basics, because in future modules and in future videos, we're gonna see how to actually trade those technical analysis principles and how to make a profit out of them. For the time being, I just want to line out the basics and how it all works, how it all comes together. So when in future videos and in future modules we pull out the big guns, you'll be able to use those guns in order to make a profit out of Forex.